A collar is an option trading strategy that's implemented on a stock that you already own. Usually, investors will attempt a collar when they've enjoyed a decent gain on their stock investment, but they want to hedge against potential downside in the shares. In other words, if you're bullish but cautious on the underlying stock, a collar might be the right strategy for you. To initiate the trade, you'll buy a protective put while simultaneously selling a covered call. Both options will be out of the money, and generally, the call option that you sell will be further out of the money than the put option you buy. This affords you more upside potential on the trade, since the sale of the call does limit your profit opportunity on the stock. Additionally, both contracts will have the same expiration date. The benefit of opening both option positions is that the premium you collect from selling the call option can either partially or totally offset the premium you'll pay to open the put. In this way, you can insure your investment against major downside moves for little to no cost. There are several possible outcomes to this strategy. If the stock falls below the strike price of your purchased put, you'll have the opportunity to sell those shares above market value by exercising your option, thereby limiting your losses. If the shares rise above the strike price of your sold call, there's a strong possibility the stock will be called away from you, so make sure that you're willing to sell at that price. Finally, it's possible that the stock will remain stuck between the two strike prices through expiration, which means that both of your options will expire worthless. Luckily, since you used the profits from the call to offset the price of the put, your overall expenditure to initiate the trade should have been minimal. In summary, a collar strategy is a relatively low-cost way to buffer against downside moves in a stock that you own. But keep in mind that there's a trade-off, namely that you also limit your upside potential.